If I handed you $1,000 today, would you actually know what you invested in? An index fund, a target date fund, one stock, crypto, or would you freeze because there are just too many options? Today, I'll show you what I'm investing $1,000 in. And by the end of this video, you'll understand exactly why. Last week, the investing wheel landed on large cap value. This investing wheel is a concept I created to help new investors overcome uncertainty in the market using risk versus reward. Because once you understand how to diversify your investment portfolio, you can minimize your risk in the market. This series isn't about picking the perfect investment, it's about showing the actual decision-making process behind long-term investing, the same way professionals think, but explained for beginners. Which means I don't want to overcomplicate it. So here's what I looked at. Broad large cap value exposure, a low expense ratio, an established fund, dividend income, and something I could confidently hold long term. Large cap value funds generally trade at a lower PE ratio than growth heavy indexes. PE, or price to earnings, tells you how expensive a stock is relative to its profits, or how much investors are paying for $1 of earnings. And before I get into what stocks I researched, if you're building wealth from scratch, subscribe below because I post one strategic investing lesson every week in this series. Okay, let's get into some individual value stocks, a mutual fund option, and several ETFs. Here's the quick comparison. Here are 2 index funds, a mutual fund, and 3 individual stocks. What I looked at is the current stock price, the dividend yield, and the return over the last year. If you look at individual stocks like ExxonMobil, yes, it had a higher rate of return over the last year, but it also has more concentrated risk. Then there's a mutual fund, which is okay if you buy through Fidelity because they don't charge a transaction fee. But I'm leaning more towards these 2 index funds. Both of these tickers are similar and provide me broad exposure, low cost, and diversification. But I like Schwab because of the estimated returns and low expense ratio. So the winner is ticker SCHV, which tracks a broad large cap value index, holds over 500 companies, charges just 0.04%, and it actually holds the 3 individual stocks I briefly discussed as seen here. And over the past year, Schwab has outpaced Vanguard and Fidelity for large cap value. Yes, Vanguard has managed the security longer, but I like a good underdog story. And because Schwab has outpaced Vanguard for large cap value, I'm going to buy ticker SCHV. So let's see how this plays out by the end of the year, and maybe I'll do a recap of where both end up. That will actually be pretty fun. So how am I allocating the $1,008 that I earned last month? Well, since I dedicated the entire amount to large cap value, I won't allocate a percentage to other stocks today. Instead, I'm investing the entire amount into ticker SCHV because one fund beats 5 when you're just starting out. Now, let's invest the entire amount into SCHV. So overall, my strategy at this stage is simplicity. I'm not picking individual stocks. Instead, I'm investing in a large cap value index ETF that holds hundreds of established U.S. companies. This gives me broad exposure while reducing company-specific risk. Could this drop 10%? Yes. Could it drop 20%? Also yes. But would I panic? No. Large cap value tends to be less volatile than growth and historically holds up better during uncertainty. Let me show you this pie chart for visual learners. This wheel represents how portfolios are built one slice at a time. And diversification isn't built in a day. It's built through disciplined decisions. Since this chapter is for new investors, I didn't want to overwhelm you. And this is only the beginning. Next week, I'm opening the envelope for milestone number 1. And what's inside is designed to help new investors take the next step. So make sure you're subscribed, and if you're new here, watch episode 1 where this journey started with just $10. See you next week.